All right, today we're going to break down a really impressive quarter from Arthur J. Gallagher Co. They're one of the absolute giants in the insurance world, and we're going to dig into the key numbers and the powerful strategy behind their incredible Q3 2025 performance. So if you follow the industry, you know Gallagher is a major player. Their latest earnings report gives us this fantastic window, not just into their own business, but really into the entire insurance market. So let's jump right in with the biggest takeaway. The first number you have to see is this one right here, 20%. That's their total revenue growth, just for the third quarter. You know, in an industry this established, a number like that isn't just good. It is a massive headline. Now, what's even more impressive is the consistency. I mean, this isn't some lucky one-off success. This is their 19th straight quarter of double-digit growth. We're talking about nearly 5 years of this incredible performance, which, makes you wonder. So what's the secret sauce? How do they keep this engine running so hot for so long? Well, it really all boils down to a super clear and super powerful two-pronged strategy. On one side, you've got what's called organic growth. That's all about building on what they already have, winning new clients, the fundamentals. And on the other side, you have mergers and acquisitions, or M&A, which is basically about buying new growth. And it's how these two work together that really makes the magic happen. Let's look at the organic side first. For Q3, Gallagher put up a very healthy 4.8% organic growth. That tells you their core business is rock solid. They're out there consistently winning and expanding their relationships. But the M&A side of the equation, well, that's where the quarter's biggest story is. This is where Gallagher made a move that sent some serious ripples through the entire industry. And look, this philosophy comes straight from the top. The CEO, Pat Gallagher, he credits this dual strategy for their success. And he makes a really key point. It's not just about the numbers. It's about having a culture that can actually pull off both of these strategies at the exact same time. So what was this massive M&A move? Let's talk about the deal that completely changed the game this quarter, the acquisition of AssuredPartners. The price tag alone just tells you everything you need to know about the scale here. Gallagher bought AssuredPartners for a staggering $13.8 billion. Just let that number sink in. This isn't just another deal. This is a landmark transaction, one of the biggest in the company's long history. And this wasn't just about moving money around. This is a massive integration of people, of culture, of expertise. I mean, can you imagine welcoming almost 11,000 new colleagues into your company practically overnight? That's the challenge, but it's also the massive opportunity right there. And you can just feel the energy in the CEO's own words. He describes the atmosphere inside the newly combined company as literally palpable. That focus on making sure the cultures are a good fit is so crucial for making a deal this huge actually work in the long run. Okay, so beyond Gallagher's own amazing numbers, their report gives us this incredible peek behind the curtain at the entire insurance market. And let me tell you, it is not as simple as you might think. Here's the most important insight. The CEO calls it cycles within the cycle. What that basically means is, unlike in the past where the whole market would get more expensive or cheaper together, now we're seeing different parts moving in completely opposite directions. And here's a perfect picture of that split. Premiums for property insurance, for buildings and physical stuff, are actually going down. But premiums for casualty lines, things like liability insurance, they're still going up. It's a tale of two completely different markets. And that division doesn't even stop there. We're also seeing it based on the size of the client. The big, sophisticated clients, the ones with a lot of leverage, they're actually negotiating their premiums down. Meanwhile, small and mid-sized businesses are still seeing their costs go up. So you put it all together, a massive acquisition, a really dynamic market. Where does Gallagher go from here? What does the road ahead look like? Well, first, they've got some very clear goals for that AssuredPartners deal. They're targeting hundreds of millions of dollars in synergies, which is really just a business term for all the good stuff, like cost savings and new revenue that you get from combining two big companies. And listen, don't think for a second that they're slowing down. Even after closing a monster deal like this one, their M&A engine is still firing. They have a pipeline with dozens of potential future acquisitions already in the works. This right here, this is the number that fuels all of that ambition. The company figures it has a war chest of around $10 billion ready to go for future M&A. And the crucial part is, they can do it without issuing new stock. which gives them a massive amount of firepower to just keep on growing. So the takeaway from this quarter is crystal clear. Gallagher's two-pronged growth engine, that combo of steady organic growth and bold acquisitions, is absolutely firing on all cylinders. And with a huge new partner to bring into the fold and billions ready to deploy, it really just leaves us with one very interesting question. Who's next?